Barry, Doug Cass was talking up volume today as being low. You have written on this, including in 2007, where price and volume tell all. To be fully clear, folks, I don't believe in volume study. Barry, do you?
Well, it is a truism that volume often precedes price in a specific stock. But, you have to look at the context. And the context is, after a hellish year of lockdown, heading into a long weekend, the economy is reopening. I think anybody who could get away from their terminals, get away from their trading desk, has done so. If you're surprised that volume is light this week, well, then you're very easily surprised.
Barry, if we go back to think Mike Santoli writing for Barron's and the world stopped Saturday morning because you had to read Mike Santoli. Right. Now he's over at the Death Star. Fine. The volume today isn't the same as when Santoli was writing for Barron's.
That's right. You have a giant rise of passive indexing, which just is a slow, steady, relentless bid. What is it? 11% of all U.S. public companies are held by either BlackRock or Vanguard. So there's that element. And then on top of that, you have the algorithmic trading and the high frequency trading. It's not the same sort of volume flows that it was 20, 30 years ago. In fact, if you look at flows, some people love to look at inflows and outflows. Outflows have dominated for most of the 2010s in a period where equity prices just went up and up. So I don't think you could read a whole lot broadly into volume, but I do still cling to the concept that volume can confirm price action in a specific stock or a specific sector.
In other words, conviction, right? I mean, if there's a lot of volume and there's price action, then that can indicate perhaps greater conviction about the direction of a specific stock or, frankly, an entire market. What is the conviction like right now at a time when people have seen froth? Perhaps it's come off a bit with respect to SPACs and some of the high flyers. And when people are looking to a potential deceleration of growth expectations already priced in?
So keep in mind, again, I hate to keep going back to the lockdown pandemic. We saw the rise of stocks as entertainment, or maybe I should call that, the resurrection of that sort of 90s era. Hey, everybody is now a stock expert. And so between Robinhood and meme stocks and Reddit, lots and lots of people were participating. And wait, I could go sit on a beach without a mask, and I could go to a restaurant, and my next door neighbor went to the Mets game last night and sat in the vaccinated sector. Hey, when all these people, section, not sector, when all these people are no longer stuck in a spare bedroom staring at a computer, I can't be very surprised that volume is tapering off. And I don't want to read too much into that as, oh, this shows you a loss of conviction and speculation and froth has run amok. There's froth and speculation. There can be no doubt. I'm surprised none of us really anticipated the rollover of the crypto coins as the market reopened. People found other stuff to do.
Well, but hold on a second. This is actually really important. And putting crypto aside, if people are finding other things to do, will some of the money that's funneled into markets because it had nowhere else to go start funneling into the real economy in a more significant way?
Yeah, that would be horrible if companies saw more revenue and profits. I mean, that would be terrible for equity markets, don't you think?
Horrible.
Oh, wait, rising revenue and profits are good for stocks. So rather than have people day trade, they go out and buy stuff. I'll take that over meme stocks and Reddit.
Barry, I look at where we are, and we're just staggering through to another bull market. I mean, we're right up, buttressed up against record highs here, there, and others. What will push us to record highs? What is the fundamental catalyst where people rationalize comfortably being at a new price level?
So a couple of things, and let's start with earnings.
Or cash flow.
Right? We're working our way through earnings seasons, and you have to recognize it's been pretty spectacular. Already lofty expectations have been met. Now, how much of that is built into prices of equities, that's a different conversation. But I like the fact that we're seeing earnings come in very strong, that people are underestimating the strength of the economic recovery, and don't underestimate the fact that record highs and new all-time highs is a bullish sign. You don't end up with record highs in a bear market. You only get record highs in a bull market. And if you look at the history of past bull markets, record highs beget more record highs.